it's very clear now we live in a multi-chain world, but we need a better answer about how these chains are going to communicate with each other and how we're going to be traversing value across these chains. So there's no putting this back in the box, right? Multi-chain is the future. The only question is, how are you going to make multi-chain easier, safer, and simpler?
Hi everyone, and welcome back to another exciting episode of NEWFORUM. And we're always thrilled to bring you awesome creators, visionaries, investors, and entrepreneurs on our podcast. And NEWFORUM is powered by New Foundation, and it's our aim to spark informative and educative conversations on the topics of crypto, the metaverse, DAOs, NFTs, and Web3.
And today, NEWFORUM is joined by Haseeb Qureshi, who is the managing partner at Dragonfly Capital. Haseeb worked as a software developer and engineer for Airbnb and was a successful poker player before starting his VC career. Today, Dragonfly has invested in many Web3 projects, such as Compound Labs, MakerDao, Paradigm, and TRLab. We are excited to talk with Haseeb about Web3 investing and the most exciting movements in the market right now. Haseeb, we are happy and excited to have you on and learn more about the work you do. Could you tell us a bit more when your starting points in your career begin? We know that you had a passion for poker and also became successful with playing it quite young. Could you tell us about that experience? We are quite curious.
I would be happy to. So I've had let's say a non-traditional background coming into investing. So I was actually 16 years old when I started playing poker professionally, which I at that time I had really no idea what I wanted to do with my life. I was still a student. And I fell into it very randomly. I actually had some friends who invited me to play a game of poker with them. And I'd never played poker before. I remember I was sitting around a table and, we were going around, we had some play chips just for fun. And I didn't really know how betting worked. I didn't know what calling was. I didn't know what raising was, or full, the whole dynamics of how, you gamble over a game of cards. It was totally new to me. And I lost my money very quickly. And I felt like an idiot. And I hate that feeling, just personally, like I can't stand it. And so I remember I went back home and I spent the next, several hours just like reading as much as I could about how poker worked, about how gambling worked and how strategy worked. And I ended up reading this article that talked about this new generation of poker players who are all these like young guys, playing poker out of their dorm rooms, who are learning statistics and game theory and combinatorics and approaching the game of poker in a new way, a more mathematically rigorous way than the old guard of, these folks who grew up in card rooms, kind of smoking and kind of playing in Dallas and in London and all these places. And these new kids were making all this money and they were reinventing the game. And I thought, that's so cool. I bet I could do that. I bet I'm smart enough to figure that out. And that was what ended up initially convincing me to get into poker. I had no aspirations of having a career or of becoming a professional. I was just like, oh, okay, I think this is cool. Maybe I can make some money at it. And before I knew it, I became a very successful player at a young age. By the time I was, after 1 year, by the time I was 17, I started with $50 and I turned it into $100,000 by the time I turned 17. And I'd never planned to become a professional player. I just ended up becoming very good at it. And then by the time I was 19, I was ranked one of the top 10 online no limit hold'em players in the world. I was sponsored, traveled around the world, dropped out of school, made a bunch of money at a young age. It was a very strange way to grow up. It was a very strange education, but it actually prepared me in many ways for what I would end up doing as an investor. Because as a poker player, you're constantly attuned to understanding risk. Risk is the most important thing to understand as a poker player. And I think the biggest mistake that most people who never have any experience with gambling or investing, the biggest mistake they tend to make is that they avoid risk wherever possible. They are too risk averse in their lives. And it's funny, when I'm playing somebody at a poker table and I can tell that they don't want to take risks, automatically that means I already know how to beat you, which is that if I push you into risky spots over and over and over again, I know that you'll fold. I know that you'll run away. And I can also tell when your frustration is building up a bit too much, that like that one time, okay, I pushed you too many times. Now you're going to go jump in. The hardest thing to play against is somebody who's not afraid of taking risks. Because if you're not afraid of taking risks, that doesn't mean that you always take risks, right? You take risks when it is rational to do so, when the reward for taking that risk is justified. Playing against a player who is correctly calibrated in how much risk to take and when to take that risk is the most difficult thing as a poker player. And the same thing is true in investing. You know, the first investment that I've made in my career is actually not writing a check, but actually deciding to pursue crypto with my career at a time when not a lot of people were doing that, right? That's actually the biggest bet I could possibly make with my life, is choosing, okay, instead of having a comfy career in the software industry where I'm, getting paid a good salary and working at a top tech company, instead, I'm going to go all in on this like crazy thing that a bunch of people think is bullshit. And a lot of people, especially when, in 2017, 2018, crypto crashed and it kind of looked like, oh, it was all a big bubble and there was no there. A lot of people look at you and they're like, what are you doing? Like, you're such a smart guy. You've got so many options, But that was in many ways the biggest investment and the first investment that I really made was saying, no. I'm going to spend my time, spend my career, spend my intellectual capital in this space. I'm going to become good at it. I'm going to develop an understanding and a reputation. And when crypto comes back and when the world realizes that what's happening in the space is really important, that investment is going to pay off. And most people, even people who entered the space when I did, most people who were there at that time left. They didn't stick it through. They didn't, go all in with the investment when they should have. And that to me is the biggest difference, I think, between people who are good at making bets and people who are not. So that, in a nutshell, is some of the lessons I learned as a poker player.
That is really impressive. I'm just wondering what was going through your mind when you are a professional poker player, what was going through your mind when you were like, okay, now I'm going to stop this. I'm done with this now, and I'm going to become a software engineer, because that's quite a radical change. And then also, at your time at Airbnb, deciding then again to say, okay, now I'm done with this, and I go and take another big leap. I just want to quickly recap what was going through your mind when you were like, okay, I'm done with poker, I've done my career in poker, now I'm going to go into a whole different field.
So my poker career was a total shit show. There was a lot of craziness that happened toward the end of my career as a poker player. But at the end of the day, I was never somebody who wanted to be a poker player for the rest of my life, right? I kind of fell into it very haphazardly. When I was in school, I was studying philosophy and then studying English. So I really had no idea what I wanted to do in my life. A lot of the impetus for me deciding to move on was just simply that I wasn't happy as a poker player. And I wanted to do something more valuable with my life than just play cards, and do something less zero sum than playing cards. And so I ended up going back to school and kind of studying. And eventually I decided I wanted to go to Silicon Valley because I've always been fascinated by what's happening in the internet industry. I'm somebody who grew up on the internet. It's such a fundamental part of my life. And that industry was just so interesting to me, but I always felt that it was something that I couldn't be a part of because I didn't have any skills. I knew how to play cards, but I didn't know how to, how do you help a tech company do anything useful? So having a totally non-technical degree, what I did was I decided I'm going to come out to Silicon Valley. I'm going to take a coding bootcamp and I'm going to learn how to code. Even though I have no technical background, I think I was 25 at the time, so I was already well past the point that most people are going to be looking at your resume and thinking, oh, okay, you're like, you're still in that early phase of your career where you're still able to turn into anything. But I studied my ass off. I learned how to code, and I grinded my way into being able to get a job at a top tech company, and proved that I could learn it. At the end of the day, I realized after spending a long stint at a tech company that I'm not somebody who works well in a big organization. Not to say that there's anything wrong with working in a big organization, but for me, that's just not where I thrive. Too much structure and too much like orderliness and too much like kind of go team rah kind of energy. Like that's not where I do my best work. For me, I thrive in uncertainty and chaos. Like I'm just really good at navigating very, very unstructured problems. And that's exactly what crypto was when I first came into the space, which is what I loved about it, was that when I first entered into crypto, so this is 2017 that I came into the space full time, and I was first paying a lot of attention to it in 2016. 2017, I came into the space full time, and at that time, there was so little that people understood about crypto. Back then, I remember there was so much less educational materials than there are today. Very few people understood the stuff. Very few investors understood the stuff, especially on a technological level. And there was so many unsolved problems. There still are, of course, in crypto, but at that time, it was so much more than it is today. And I loved it. It was so fascinating it reminded me a lot of what it was like at the beginning of my poker career. When I first came into poker, a lot of what we did in those early days in the poker industry was that we were trying to figure out almost like the science of poker at a time when so little was understood. That we would try new things and we would discuss them with other top players and see, oh, what if you start doing a min 4-bet? What if you start, automatically check raising every draw you turn? What if you do this? And we were trying new things out, and like the science was being unfolded. It was kind of like physics in the 1920s. That's what it felt like, in the vibrancy and the new ideas that everyone was trying out. Today in crypto, it's a little bit different just because there's so many more people, there's so much more that's written about it, there's so much more educational materials, but it really was like the Wild West, 4 or 5 years ago. And I love that. It was so much, it was so obvious to me, this is what I should be doing. And this is what is close, to me, is closer to the kind of place where I thrive and where I do my best work and where I also add the most value. So that's, for me, why it became very clear very quickly that crypto was my calling. It's what I should be doing.
Very, very interesting. And how did you then went into being a VC? Like, there's different type of jobs in crypto, I guess. And like, how did you went from, okay, I'm going to be a VC, and how did you came to Dragonfly then?
It's a great question. So I had no aspirations of being a VC. I didn't even really know what a VC was. I mean, I kind of knew high level what a VC was, but I didn't know very much about it. When I first got into crypto, I first did some cybersecurity research. Me and a buddy of mine, we discovered a security vulnerability against a protocol called Bancor, which was one of the very largest ICOs back in 2017. And then I worked at a company called 21, which became Earn.com, which got acquired by Coinbase. That's now, the product is now called Coinbase Earn. Then I started my own startup working on a stablecoin. So I was actually an entrepreneur. And what ended up happening was, while I was working on the startup, we had a bunch of acquisition offers from exchanges. And I ended up meeting Naval Ravikant, who's a very well-known angel investor in Silicon Valley, because he was an advisor to many of the exchanges. And so I came to him to ask him for advice about these acquisition offers and like how to navigate a potential acquisition. And when I sat down with Naval, I remember he told me, you don't want to get acquired by an exchange. And I was like, well, what do you, I do actually, like, this seems great. I'd love to get the acquisition. He's like, no. Look, exchanges are boring. You're gonna spend your life like just ramming your head against legal. It's a waste of your time. You should become an investor. And I was like, become an investor? I don't know anything about investing. Like, how the hell am I going to be an investor? And he was like, no. Look, it's easy. Being an investor, you don't need to understand like, financial modeling, or, you don't need to know stuff about IRR or LPs or any of this stuff. The most important thing, the hardest thing to learn, is to understand the technology and to have good judgment. If you have those two things, you can become an investor. The rest is easy. I can teach you the rest. And he ended up convincing me to shelve my startup and to join his fund, which was called Metastable Capital, as a GP. And that's how I got my start as an investor. So at that time, I really didn't know anything about investing. My idea of what a VC does is that a VC is like a very charismatic person who goes to parties and just like meets entrepreneurs and just kind of, charms them, right? That was my idea of what VCs do. And I was like, I can't do that. I'm not a party guy. Like, I'm not super social. I'm kind of like an introvert. I like to code. I like to play cards. I like to whatever. So how am I going to become a VC? And I realized, of course, as I learned more, that there are many different kinds of VCs. There are many different ways to be a good investor. And my unique skills and unique perspectives make me different from a lot of other people in VC. And what you learn if you spend enough time in VC is that the most important thing about being a VC is actually to be different, to be as different as possible from other VCs. A lot of people who come into investing, they think that, oh, okay, I should like try to copy somebody who's really good. I try to be as much like them as possible. So like, oh, Chris Dixon, how do I be more like Chris Dixon? Or they say, oh, Katie Haun, how do I be more like Katie Haun? And the answer is that no, you should not try to be like them. Because if you try to be like them, they're going to beat you every single time because you're just like a crappier version of them. What you should do instead is try to be as different from them as possible. You should try to be as much yourself as possible. And it's only through doing that that you will become different and you will become polarizing. And polarizing in venture is good. You want to be as polarizing as possible because that means that there's going to be a lot of people out there who don't like you. If you're polarizing, a lot of people are going to say, hey, Joyce, I don't want to work with Joyce because she's so, I hate her. I can't stand her. But some percentage of entrepreneurs will say, Joyce is the shit. Joyce is awesome. I love Joyce. She's so outspoken. She's so different. I want to work with Joyce. I don't want to work with Chris Dixon. I don't want to work with Katie. I want to work with Joyce. The only way you will ever get that is by being different. If instead you are like the discount Chris Dixon, then anybody who can take Chris Dixon's money will take Chris Dixon's money and you'll be left with the leftovers. And being left with somebody else's leftovers is the easiest way to be a terrible investor. So I came to appreciate through my education as an investor that the most important thing is to be different. And so that's what I've really done and embraced as an investor, is to define my own brand and identity and to do things our own way. And that was kind of the genesis of Dragonfly. So Dragonfly really started, the other managing partner of Dragonfly, this guy Bo, who's my now partner. He was a very experienced Chinese venture capitalist. He and I built a relationship and we decided to start a different kind of fund together. And Dragonfly, I think, is very different because one thing about Dragonfly, unlike any other fund in crypto, is that we're a global fund. So we have people all over the world in Singapore, Hong Kong, China, West Coast, East Coast, US, Puerto Rico, Western Europe. We're a very global team. And although crypto is obviously global, right? I mean, if you look at the trading volume in crypto, most of the trading volume in crypto is not in the West, it's in Asia. The exchanges, most of them are in Asia. The users, most of them are in Asia. But most of the investors are in the US. Most of the funds, most of the LPs, most of the there's this big asymmetry between where stuff is happening and where the money is. And now, of course, a lot of the innovation comes from the West, comes from the US, comes from Western Europe, comes from Israel and places like this. But it's not the whole picture, right? If you really want to understand what crypto is, if you want to see the whole elephant, you have to take this global view. And nobody else in crypto was doing that. And so we decided, okay, you know what? We're going to do that. We're going to be different. We're going to be different than any other fund out there. We're going to take this global perspective. And the other thing about us is that we're going to be very technical. So I'm a technologist, obviously. More than half our investment team is technical. And that gave us a very different vantage point to think about crypto, talk about crypto, have a different perspective on how to invest in this industry. And in the early days, we wrote a lot of original research. We had a different vantage point on how to invest in crypto and how to think about this stuff. And that's a lot of what defined our brand and made us very different to most entrepreneurs than any of the other investors out there. Now today we're a lot bigger, we're more successful, more people know, a lot of people know Dragonfly now in crypto. But back when I first started, nobody knew who we were. Nobody gave a shit who we were. When you're a new VC on the block, you're just some random brand. Nobody cares about you. And so, we didn't have the advantages that a lot of other funds have. We're not an Andreessen, we're not a Paradigm. We don't have this amazing pedigree or this, super strong brand like Sequoia or Andreessen standing behind us. And so we had to invent ourselves. And that's a lot of what, that's a lot of what, I think I'm good at. I'm really good at that 0 to 1. I'm good at that, kind of starting something totally new and defining something where nothing previously exists. And now we're entering into a new stage. We're like, okay, we're now kind of an established brand. A lot of people know who we are. How do you build that into a platform, a franchise? How do you scale it? That's the new phase of what I'm navigating as an investor at Dragonfly. But it's a lot of fun. So anyway, that was a very long-winded answer, but that's the story of how I ended up at Dragonfly.
That's actually super fascinating because we actually had this question about how do you differentiate as a VC. So you just covered that almost completely. So it's really interesting because there are so many Web3 VCs out there, right? So and you guys try to do it in this way that you are just very different as partners, and so that's super cool. At Dragonfly, so how does it work then when you look at into the startups? Like, what are you really looking for in the founders? Do you have a part of the usual criteria, the market and so on, but like what really excites you and what makes you kind of have that feeling like, yes, I want to invest in these guys?
There's, generally speaking, there's like two profile of founders that we tend to be drawn to at Dragonfly. The first type is what I call like the standard Silicon Valley founder, which is, it's somebody who has experience building some other product. They worked at a tech company. They went to a great school. They, all the usual stuff that if you listen to like a Y Combinator podcast, they'll tell you what they look for in a founder, right? So that's the kind of thing that anyone reads the resume, they're going to see, okay, this person's impressive. But there's also another kind of founder that's very successful in crypto. And we often call this the pirate founder. And the pirate founder is somebody who is very different than the traditional Silicon Valley founder. They probably would never be able to get funded in any industry besides crypto. They're the kinds of people who, they tend to live in their parents' basement. They're very opinionated. They're often very cantankerous. They get into fights a lot. They are on Twitter all day long. And they just have very, very strong opinions, right? They're just like, no. The way you guys are doing proof of stake is totally wrong. You guys are idiots. We got to do it this way, right? This is the only right way to do proof of stake. And so these kinds of people, they tend to be questionable leaders. They're not great at hiring. They're bad at they're often bad at fundraising. They're bad at a lot of the things that traditional Silicon Valley founders are good at. But in crypto, they often have superpowers because they understand something about whether it's the technology, whether it's how to activate community, whether it's some insight into some element of crypto, because it's all they think about. It's all they spend their time on. And so if you think about, what kinds of founders have been successful in crypto, I mean, think about like Vitalik. Vitalik would have not been a standard Silicon Valley founder, right? He's just like this kind of weird kid who dropped out of school, is like obsessed with Bitcoin, becomes a journalist because he just loves Bitcoin so much. Like that was how Vitalik founded Ethereum. And he had no leadership skills. He had like 14 co-founders because he couldn't say no to anyone. Like he was a classic, not Silicon Valley founder. Or even think Satoshi. Was Satoshi a Silicon Valley backable founder? Of course not, right? He was this crazy guy on the internet, didn't use his real name. He actually, funny enough, a lot of people don't know this. One of the initial things that he was doing in the Bitcoin source code, he was trying to build a poker game. A lot of people don't know this, but there's actually source code for a poker game inside of Bitcoin. Never ended up getting finished. And so there's so many examples in crypto of very successful founders who have this very atypical profile, but you can't ignore it once you see it. How many founders in crypto are like this? And so that's the other kind of person that we look for, somebody who's so deep and so obsessive into the elements of crypto that they end up making great founders.
Relating that question, something I always ask myself, how much I was seeing actually a stat that, there's different things that play into what makes a startup successful: timing, community, the team, and also product market fit. And from your experience, like it actually said in the stat that timing was the most important thing. But I want to know from your side and your experience, like what is the most important thing?
It's tough to say what is the most important thing. It's kind of like asking, okay, if you want to make a pasta, what's the most important thing? Like, is it the flour? Is it the timing? Is it how long you put it in the oven? It's like, well, if you kind of get any of these things wrong, it's going to be a shitty pasta. So you sort of need a lot of things to go right in order for a startup to be great. I guess the number one thing that I would say, which is kind of a half answer, is to my mind the most important thing is insight. You need to have some insight into why this product is necessary, or why this thing that you're trying, that has been tried many times before, why everyone else got it wrong and why you're going to get it right. If you don't have that insight, you don't have that unique perspective that you earned by understanding something deeply about the market or about customers or about this moment or how to put these technologies together that nobody else has put together, then I think, especially in crypto, it's very hard to have any real chance of success outside of just getting lucky. So no, there are a lot of things in any industry that are kind of luck, right? Like, so why was it that Bored Apes were successful and not, some other NFT collection? I don't know. Was it luck? Was it skill? Was it some combination of the two? It's really hard to say, right? It's very often the case, especially in consumer, that a lot of things in consumer are just kind of random. They're difficult to predict, that people love this thing, they don't love this thing, and then this thing takes off. But in a lot of things in crypto, like if you're talking about protocols, you're talking about DeFi, if you're talking about exchanges, A lot of these things are really about understanding your customers better than anybody else, or understanding the technology better than anybody else. And if you don't have that insight, it's very, very difficult to create a really massive, successful product.
Yeah, I totally agree. I believe it's really a combination of so many things. Like, it's really hard to say. And one of the big things is actually luck, when the market completely down, for example, like we are right now. So like, what can you do? Sometimes it's really hard to succeed. But
that's kind of true. That's kind of true. But I want to push back against that too, because like, if you think about the most successful projects of the last cycle, right? What were they? They were Uniswap, OpenSea, Solana, right? All three of those were started in 2018 in the bear market. All three of those, when they launched, right? They launched, you take Uniswap. Uniswap launched, I think it was 2018, 2019 when they launched. They launched before the term DeFi was even coined. At that time, all of DeFi was doing less than $1 million in volume a day. Nobody cared about Uniswap when it first launched, right? If you look at OpenSea, OpenSea launched after CryptoKitties had already died in beginning of 2018, right? They were trying to make NFTs work at a time when nobody cared about NFTs. There was no volume. People thought it was dead, and they just kept at it. They just kept grinding until NFTs finally came back in 2020. And if you look at Solana, when Solana first came live, when they first launched their token was trading at what, it was like 60 cents, 50 cents. Nobody cared. It was just like some crappy VC coin. It wasn't until SBF and FTX came and adopted Solana with Serum that Solana finally became a thing, and that's like the juggernaut that we know today. But when they first launched, they didn't have any of that. And so, if the most successful startups, like it doesn't matter if you come in a bull market or a bear market, right? The important thing is that you understand a problem that you believe is big, that you believe needs to be solved, and that you stick it out until you fucking solve it. That's what Uniswap did, right? They were like, look, I know that I have a better way to trade tokens than what everyone else is doing. What OpenSea says, I know this is a better way to trade NFTs than what everyone else is doing. So I know this is a better layer one than what Ethereum is doing, right? But you have to keep going. You can't just say, oh, well, here it is, it's live. Why isn't anyone using it? Okay, whatever, I'm going to go home, right? No, you have to stick it out and keep making the product better and better until the world is ready to understand why what you're building is so valuable. And eventually it does.
That's right. The world can collapse, but you just go on.
That's right. That's absolutely right.
That's right. So since we are in the market subject, it would be interesting to know your opinion about the current trends and where is the market going really in terms of innovation. Do you see, what are the exciting projects that you see right now?
Exciting trends. I mean, look, when you're in a bear market like this, there aren't a lot of narratives that get the market excited, right? That doesn't mean there aren't important things that are happening, but it does mean that the market is no longer being driven by, this layer one narrative, this DeFi narrative, this NFT narrative, this GameFi narrative. Things are instead just happening, but the market is not really responding to them, right? But a lot of things are still happening. So, I mean, one most obvious. So we recently made a big investment into Aptos, which is the layer one that emerged from Libra and Diem. That was a team that spun out from Facebook. So they're going to be going to mainnet quite soon. Very exciting. The Move ecosystem has so much momentum behind them. That's one area that I'm very interested in. Another one is looking at these ZK EVMs. So ZK EVM stands for Zero Knowledge Ethereum Virtual Machine, which is a way to kind of build something that's like Ethereum, but completely operates as a rollup, proven in zero knowledge. It allows you to be much more efficient and much more scalable than what you can do on Ethereum Layer 1, and in a way that's also much more efficient than what you can do with an optimistic rollup, which is the dominant form of rollup today. This technology is still very new. It's still very early for the ZK rollups, but I think they're going to come of age within the next year or two. And I think this is very much going to be the future of Ethereum scaling. So there's a lot of stuff like that I find really fascinating. And to take another example is like interoperability, right? So a project we invested in recently is called Axelar, which is a cross-chain interop protocol. You saw just yesterday, we saw the most massive hack in Binance Smart Chain history. They just lost 550 million from basically a bridge hack. And over again, we keep seeing these massive bridge hacks. They just don't seem to end. And a lot of this is just that, look, we clearly need a better answer for bridge security than what we have today, which is these kind of one-off bridges that, one party is basically putting together and kind of trying to get things working. This seems to me, it's very clear now we live in a multi-chain world, but we need a better answer about how these chains are going to communicate with each other and how we're going to be traversing value across these chains. So there's no putting this back in the box, right? Multi-chain is the future. The only question is how are you going to make multi-chain easier, safer, and simpler? And to me, that's one of the huge problems that needs to get solved going into the next bull run. So from a market perspective, look, the market's going to be sleepy for a while until we see a reversal in the macro environment. And that's going to take some time, right? I don't think it's going to happen in the next 3 to 6 months. But it's possible that this time next year, inflation is already down a lot. We start to see rates start to go down, and there becomes a recovery in risk assets. I believe, not financial advice, I believe that will eventually happen. The only question is that going to happen next year? Is it going to happen the year after? How long is it going to take? But when you see risk assets recover, my guess is that that's likely when you're going to see crypto also recover. But until then, keep building. And these problems still need to get solved regardless of how long it takes.
Exactly. And everything that goes down will go up again. Also excited to know from you, you wrote a blog post about decentralization. And you said that decentralization is not as important as you think. And I'm wondering, we talk a lot about creators and how creators are excited to join Web3 because this idea of decentralization and that they can finally be part of this market, and also there's not this winner takes it all market. And I wanted you to maybe explain a bit what you meant within that blog post and how you see this really playing out, because this is a big question for our creators, if it's really translating within the Web3 space all these things that we kind of set off to do.
Yeah, definitely. So it's a bit of a nuanced argument. So if it doesn't make sense with my explaining it, I encourage you to read the post itself. But basically, what I'm arguing in that piece is that there's a very strong instinct within crypto to look around at stuff that you see and say, oh, that's not decentralized enough. That's not decentralized enough. This thing is not really decentralized. It could be more, and blah blah blah. And there's kind of this finger pointing game. It's very reminiscent, I think, of if you think about early Christianity, people would point fingers and say, no, you're a heretic. Oh, you're not Christian enough. You're not Christian enough. And it's okay, why are we doing this? What's the point of this exercise? And it kind of, if you ask that question and you kind of pull on the thread hard enough, what you start to ask yourself is okay, well, why do we care that things are decentralized? Why is it important for things to be decentralized? If you ask that question about Bitcoin, which is where all this started, right? The reason why Bitcoin needs to be decentralized is so that Bitcoin can be censorship resistant, is so that nobody can take down Bitcoin. Bitcoin actually, if Bitcoin wasn't decentralized, Bitcoin could not exist. It wouldn't work because Bitcoin would just live on somebody's server. And then if the police or if the government or the SEC or whatever was mad about Bitcoin existing, they would go to that guy and they would tell him, hey, turn off your computer. And they would, and then Bitcoin would be dead, right? So Bitcoin had to be decentralized. They had no choice but to be decentralized. But for most other things in crypto, if you keep pushing the decentralization more and more, the question is, what do you get? Is decentralization the point? Or is decentralization a means to an end? If it's a means to an end, what is the end? What is the actual thing we care about that decentralization buys us, right? In philosophy, the way you describe this is this an instrumental good or a terminal good? Meaning that, is this only useful because of the other thing it eventually gets us? Or is it good in and of itself, right? Your car is not good in and of itself. Nobody, the car in and of itself is not useful. The thing that's useful is that the car gets you to a place you actually want to be. Nobody actually wants to be in their car. They want to be somewhere else, right? So a car is instrumentally valuable. In the same way, money is instrumentally valuable. Nobody actually wants green piece of paper, right? If they were just green piece of paper, who cares? But it's useful because it gives you other things you actually want. In the same way, I argue that that's also true of decentralization. It is not an end in and of itself. If something is more decentralized, who gives a shit? What does that matter? The thing that we like about something that's decentralized is that it's safe, it's secure, it's robust, it's censorship resistant. It is perhaps even legitimate, right? Maybe some legitimacy in the governance or in the models behind some of these things comes from their decentralization. But that's what we care about, not the decentralization itself. And so if you understand that concept, then you have to ask yourself the question of, how much decentralization do we need? And if we keep adding more decentralization beyond that point, is it actually useful? Or are we just virtue signaling to each other? Are we just trying to say, oh, well, I'm more Christian? No, I'm more Christian. So that question, I think it's a very deep question. It's a very nuanced question, but that's the question I'm trying to pose in this essay. So anyway, I would encourage you to read it. I don't think it is definitive one way or another, how much decentralization is enough, but that is the fundamental question you have to ask yourself, is if I do all this work and I make all these trade-offs to become slightly more decentralized, what am I actually buying for my money? If you don't understand how to ask that question, then I think you're going to be making a lot of bad trade-offs and trying to push things to be more and more decentralized for its own sake, when it actually is not in the interest of the users of an actual protocol.
And quickly add on that, is it always good, in terms of like DAOs, like DAO governance? Like we had many guests on saying that everything should be a DAO and everything should be centralized, and you could go against that with saying maybe nothing would get done, or there would be, I don't know, maybe there needs to be some, in DAOs for especially, like if you think about that, like there needs to be some central movement kind of.
I think it would be interesting to know about DAOs a bit more, like if you guys have looked into any DAOs for investment, because I know they're fundraising as well. And for instance, we and our ecosystem and our community of creators and designers and brands, these companies, they're all looking into Web3 from the perspective of creating a DAO and decentralized communities, for example. So many of them are looking into that aspect, really. So I would love to hear your opinion about it as an investor. So how do you see this going? Is it like something where you would be interested in investing in at all?
So we've made a number of investment into DAOs. So into DAOs directly, like, we invested into MakerDao, we invested into Lido, which are, they operate entirely as DAOs today. We've also made investments into DAO infrastructure. So we've invested into things like Juicebox. We invested into Parcel, which is like, DAO tooling. So we made a number of investments in the DAO space. It's something we're not, foreign to by any means. But, to Joyce's point, I think there's, the problem today with a lot of these DAOs is that there's a kind of purity ethics around decentralization. There's a kind of religious fervor around DAOs and decentralization. And the reality is that today, most DAOs are not really DAOs, right? Like DAO stands for Decentralized Autonomous Organization. And most of these quote unquote DAOs, there's no D, there's no A, there's just an O, right? It's just, 3 people with a multi-sig in a Discord, and they say, oh, great, we're a DAO because we issued a token. The reality is, like, to be a DAO is actually to make very steep trade-offs. It's to make very difficult decisions, to make it much slower, much more difficult, much more laborious to make decisions. To your point, it's much harder to coordinate when you're a DAO. Now, so for some people, it's worth making that trade-off, right? If you're MakerDao, it is very, very important that you be decentralized enough to be able to, stave off regulatory incursions, because what you're buying from that in terms of robustness and legitimacy is so valuable that it's worth paying the tax, right? So when we think about decentralization, we should think about the decentralization tax that you have to pay. And the question is it worth it to pay that tax in order to be more decentralized? And for a lot of organizations, the answer is no, of course not. Like, being decentralized is so slow. It's so frustrating. It makes your decision-making so much worse than it would be otherwise, because now you're playing, before, if you're not decentralized, right, or not that decentralized, then you can have, it's kind of strong, charismatic leaders who can make smart decisions. If you want to be decentralized, then now you take your whole community and you're playing like a big, giant Ouija board. You guys remember Ouija, like that game where everyone holds the little thing and you kind of write words together, right? Like, that's kind of what operating a DAO is like. And it's extremely slow. It's very stupid. Everyone's constantly fighting, and it's very hard to make good decisions that way. And people don't like to acknowledge this, that DAO decision-making is a lot worse than centralized decision-making. And that's okay for certain applications, for certain use cases, that's necessary, right? But for most things, especially very early on, I'm a big fan of what Jesse Walden called progressive decentralization, which is the idea that you start off more centralized, more nimble, more ability to move quickly on your feet. And as the product solidifies and becomes more concrete and you know exactly what the product market fit is, then you gradually start decentralizing it and taking away that nimbleness and that speed and that alacrity more and more, because of the fact that look, I kind of understand now what the final product is going to be. But until you get there, I think it is better, generally speaking, to not try to be too decentralized too quickly.
My next question is really for our investor community. We have quite a few investors, angels, and funds that are traditional Web2, let's say, funds, who are really curious about Web3, but they are really looking into this industry from the first kind of point of view and like first time. And so what would you give them as an advice, not a financial advice, like what to invest, nothing like this, but where to start really? And like what would you really like tell them where to go for learning, for example, about Web3, or what are the best first steps really for investors?
That is a good question. I wish I had a better answer to this because it's been such a long time since I've been at the beginning of my learning journey, and there's so many more resources there are today than there were when I first joined. I think there are some pretty good courses now. There's a great MOOC on DeFi, I think that Berkeley offers. There's like an online Stanford class you can take as well. I think there are a lot of courses now that are more comprehensive and kind of giving you the overview of what's happening in the space. But broadly, what I'd recommend is like, instead of starting, if you're starting from zero, right? Instead of starting with, okay, I'm going to learn like everything there is to know and go super deep. Instead, I think you should just pick one topic that you're excited about and try to learn as much as you can about that topic. So if you love DAOs and you thought that was a super cool conversation about DAOs, go learn everything there is to learn about DAOs. Learn everything anyone has written about DAOs. If you love DeFi, go super deep in DeFi, go read, there's a book that was written a little while ago by, I think Harvey Campbell, I think is his name, a Duke professor, called DeFi and the Future of Finance. Go read that, go learn about all the big DeFi concepts and primitives. If you love layer ones, if you love consensus, if you love cryptography, whatever it is that gets you excited, go super deep on that thing. Don't treat it as like a homework assignment that you need to go learn every single concept and do all this stuff. Because if you do that, you'll just get burned out. You'll say, never mind, this is boring. I don't want to, it becomes too much. It's too overwhelming. Crypto has been around for a long time now. There are a lot of different rabbit holes you can go down. And the best way to really learn is to pick one thing you're passionate about and go deep. And then as you do that, you'll gradually start branching out into other concepts that are adjacent. And to me, I think that's the best way to learn, rather than trying to do this big top down, okay, I'm going to learn like everything there is to learn about crypto.
That's really interesting because, when I think about investing and stuff, I always hear like, yeah, diversify. And also thinking about like what you said in the beginning about as an investor, you should have a strong standpoint and maybe have even a niche or maybe be different. So we can really take away from this that it's good to be like specialized. So it's good to have your area and be different. Maybe you love games and you're really invested in games, or you're really into the DAOs and you really go deep. So that's something I take from this conversation today. And to wrap it up, Haseeb, I have one more question for you, and then we let you go. But what are like some 3 takeaways and advice you would give to founders when they're building out their projects? What would you say to them? Is it persistence? Is it get a better team? Like, what is something you would give them advice?
Get a better team. That's rough. I wouldn't say get a better team. That's kind of mean. 3 pieces of advice I give a founder. So let's see here. Number 1 would be focus. When you're in a bear market, there is very little premium on doing a bunch of random things. When you're in a bull market, it's very easy to get distracted. There's so many things happening. There's so many new narratives. It's easy to pivot and say, oh, I'm gonna do this thing and also add NFTs, and I'm also gonna do blah blah blah. In a bear markets reward focus. So pare away anything other than your core product, or like the core mechanic or core thing that makes your product different, and focus on that and bring it out and really kind of amplify it as much as you can. That's thing number 1 is focus. The second thing I'd say is that you don't want to get too swept up, or you don't want to pattern match too much to what happened in the last cycle. The biggest mistake you can make is building for 6 months ago as opposed to a year from now. A year from now is where you want to be your eyes fixated on the future. And the future never looks like the past, especially not in crypto. The future is always different, right? If you look at what the 2018 cycle looked like, the worst founders in 2019 were the ones who were thinking about what the top of the bull market looked like. And they were building things that were being rewarded, 6 months to a year ago. And the best founders that we talked about, Solana, OpenSea, Uniswap, all of them were looking forward. They were looking about how the world is going to change, not about what did people want 6 to 12 months ago, right? If you were doing that, then you would have built in 2019, you would have built like an ICO platform. Well, that was exactly wrong. That was exactly the wrong thing to build, even though you might have looked and said, well, this is the biggest problem. I see all these people who are struggling with ICOs. I'm going to build a better launchpad for ICOs. That was exactly the wrong thing to build. The right thing to build was thinking about how the market was going to evolve going forward. That second thing, I guess the third piece of advice I'd give to a founder is kind of the same thing that I was telling to the general advice that I give an investor is that you actually want to be as different as possible. You want your product to be as different as possible. You want your pitch to be as different as possible. A lot of people, whether it's in investing or whether it's in entrepreneurship, they have this idea that there's safety in crowds. And that if I kind of sound like other DeFi protocols, if I kind of look like other DeFi protocols, if I tell my story the way that other DeFi protocols do, then that makes it more likely I'm going to get funded, or it makes it more likely I'm going to get users, makes it more likely I'm going to blah, blah, blah. And it's exactly the wrong approach. The reality is that you want to be as different as possible, because if you're like everybody else, then almost certainly you're not going to stand out from anybody else. You're not going to actually unlock anything new if you just kind of fit into the crowd. And so actually the best place to be is far away from the crowd, right? When Uniswap first launched, there was nothing like Uniswap. When OpenSea first launched, there was nothing like OpenSea, right? That's what you want to be like. You want to be as different as possible from everything else that's out there. And that's true whether you're an investor or whether you're a founder. This is so true. And also I feel like sometimes you think of an idea and that idea another protocol is already implementing. So I always wonder how these ideas get pushed around, but then again, these other teams have the same idea. And if you're far away from the crowd and you see some insight or something that other people don't see before them, then you might have an advantage. So thank you, Haseeb, for joining us today. Also, we'd love to know where we can find you on your social platforms so our community can follow you and your journey with Dragonfly. Absolutely. Just look at my name. I'm Haseeb Qureshi. If you just Google me, you'll find my Twitter. That's the easiest place to follow me and follow our work. Yes. And if you want to get more involved within our community, make sure to follow us on Twitter. We are NEWFORUM_NCO. And also we have a Discord where we share everything that is happening within the community. And we can't wait to see you guys in the next episode. Thanks so much for having me.